Hey everyone, welcome to the Note Investor Podcast. I'm Dan Deppen, and today I'm going to be talking about the future of note investing and my vision for what the future of note investing is going to ultimately be. And I think it'll look radically different than it does today and than it has for the last 10 years or so. But before we get into that, I encourage you, if you're watching this on YouTube, to like the video and subscribe. That really helps to grow the channel. If you're listening to the podcast, would really appreciate it if you could leave a 5-star review. That really helps get the podcast out there so more people can enjoy it. And then also give you a little bit of a state of the market, little update on that, some things I've been working on lately, doing, and then we'll get into my vision for the future of note investing. So market conditions continue to stay pretty loose and pretty healthy. Started talking about this, I guess, for a while now. Kind of like late summer, early fall last year, definitely started to see more deals. That's continued. Seeing a lot of stuff, a lot of mobile home notes available and land notes as well, but there's still plenty of single family residential. I bought a handful of mobile home notes this year. Haven't done any land notes just yet, but that's probably coming at some point. But Polio's been sending out, a lot of stuff. PaperStack continues to have a couple hundred assets on it. I was just looking through some of their stuff, and there's some good stuff on there right now. And then there's obviously a lot of other places you can go to buy notes as well, and continuing to see a lot of outreach from investors with IRA money who are looking to put it to work. So definitely a good time to be involved in notes. Quite a bit different than where we were, say, a couple of years ago, where things had kind of tightened up quite a bit. So some things that I've been up to, I just got back from Washington, D.C. I was at the NARO conference. NARO basically does low income housing. I didn't actually attend the conference, but I was kind of tagging along with my girlfriend and crashed a few happy hours. So definitely interested to see that side of the business. Some of my takeaways from that are cost of housing is definitely a big problem in the country overall, continues to be, and it actually seems to be getting worse as opposed to getting better. So HUD and other folks, have programs to try to help with that, but there's only so much they can do. And I think that, some of the things that happen in our industry, doing seller finance, creating land contracts, getting people into mobile homes, really helps with that quite a bit. I would say probably far more than most people realize. So there's a lot of like hidden good that happens in this industry. I did learn that at least in some areas, they don't use the term landlord anymore. In a lot of cases now, they're calling landlords housing providers, which I found kind of interesting. I guess that's kind of a nicer name overall. Kind of reminds me of here in Colorado years ago. In Boulder, they changed some terminology where in Boulder, they don't have pet owners, they have pet guardians. So I don't know, we seem to be going into like a certain kind of a similar language being used in the affordable housing space, at least. That group also said they've been trying to get Biden to talk about low income housing, and he's been reluctant to do it for whatever reason so far. So definitely a cool event. Met a lot of interesting people from across the country and got another perspective on the housing market and the housing industry and some of the challenges that our borrowers have, finding housing that they can actually afford. Because right now, especially for in, certain markets, certain cities, if you're working an hourly job, it is really challenging to find decent housing. As far as my buying activity, haven't bought any in a little bit right now. It's been several weeks, but I'm gearing up to do another wave. So looking forward to doing that, continuing to expand my portfolio as we move along in this year. If you watched was it the last podcast with Fred and Tracy Rui? If you haven't, I highly encourage you to go back and watch that. They gave us a really great deep dive on the seller finance market. I'm continuing to do some additional poking into that myself, kind of doing some studying on sharpening up how to structure seller finance deals to maximize the value of the note and make the note itself more saleable. I think going forward, we'll continue to see a lot more seller finance activity. It was kind of at an all-time high in 2023. And given what Fred and Tracy were saying about the way the banks are tightening up and just doing less lending, right? Like the bank standards are beyond what the Dodd-Frank standards are. So that's going to open up a lot of opportunities for creating seller finance notes, buying seller finance notes, and a lot of other things as well. So I'm continuing to probe and kind of improve my understanding of that. I'll probably have more content on that at some point in the future. Yeah. So as far as my podcasting activity, if you've noticed, I've been a lot more regular. So the last couple of years, it was more hit or miss. I'm trying to get these out weekly. So if you've got particular topics you want to hear about or people you want to hear from, please drop me a note. You can leave the comment or send me an email. My contact information is in the notes. I'd love to hear from you. I've definitely haven't had any issue finding a shortage of topics with everything going on. But if there's something else you want to hear, and it doesn't have to be a note person in general, right? It could be someone in an adjacent form of real estate or something else. I'd love to have them on. So let me know. Coming up on the podcast before too long, we're going to have hopefully Bob Repass at some point, working on scheduling with him. We're going to have Marco Barrio on to talk about hypothecations. And then also going to have one from Alex Godofsky from Pro Title. We're going to talk about the way due diligence is changing and some things people are doing to really automate that process. And that kind of leads into where I'm going with some of this future of notes. And I'm also trying to keep always improve the quality. I had a guy reach out to me who I didn't know was in another real estate investing space, not specifically notes, probably somebody you guys don't know. And the interview was it was tough. He wanted to come on, but didn't have a lot to say. So I'm actually not releasing that one. That's the first time I've actually done that. But like I said, I want to keep bringing you guys, the stuff you want to learn about. So let me know if there are other topics I haven't been hitting or other individuals that I could bring on. And I think in the coming months, you're also going to see me popping up on other people's podcasts, some in the note world, but also beyond that as well. So lots of exciting stuff. Like I said, I just took my trip to DC. I've got some more trips coming up. I'm going to be going to Mexico in May, so probably talk more about that. That's not a real estate related trip, but it's part of an entrepreneurship group that I'm in. I went to a similar event last year in Mexico, came back with a lot of learnings and expect to do that again. And then also working on a lot of updates to the training courses. So there are going to be some Note Launchpad updates coming as well. So if you're interested in learning about notes, I encourage you to check the links in the show notes. If you want to do self-paced online learning, I've got courses for that. And then the other thing I've been working on is a new 6-week note accelerator. And so that's in the works right now. I'll be talking a lot more about that in the coming weeks. So what I've had a lot of people tell me is they enjoy the online courses, like everything's there, but they want me to just kind of walk them through the whole thing. So this is going to be a 6-week program with a small intimate group where we meet a couple times a week, and it's designed to get them up to speed really fast. I'm actually working with some of the first students right now and getting that all nailed down. So if you're interested in something like that, number one, like I said, the market timing is pretty good to be doing it now, and you can learn more information from the links in the notes. So, okay, so that was like a way too long intro. So now I want to get into, some of my visions for the future of the note industry. So when I was at Note Expo last fall in November, I was looking around the exhibit hall, and I'm not sure exactly how many people they have attend that. I think it might be like in the 500 range, something like that. And I was thinking about, well, one, the size of the note market, right? Like I think a few years ago, Eddie Speed said at one of the note expos, he thought it was maybe 6 or 7,000. It's a really hard thing to figure out. If I had to take a guess, like the number of people in the country who are truly active in note investing, I'm guessing it's somewhere south of 10,000, right? Overall. And I was at Note Expo in the fall. I was, kind of looking around, and I'm like, well, less than 10,000 note investors compared to the billions and billions of dollars of seller finance notes that are getting created, like Fred and Tracy talked about, and just compared to the size of all the land contracts and other mortgages that exist that are floating around out there, the ones that continue to filter down through the banks. I think it supports an industry that's at least 20 times larger than that. So I could see us going from somewhere south of 10,000 note investors. That number should be more like a couple 100,000 overall. And I think that's reasonable. I was doing some research on how many people out there do rental properties. I think it's like over 2 million in the US, and there's other people that do multifamily. So having note investing be 1/10 the size of rentals, I think is actually fairly reasonable overall. So I think that's part of where we're heading. And so a lot of the things, as I've been doing work and thinking about different things and putting together different programs, I've been thinking about how to facilitate that change from where it is now to where it's ultimately going to be heading. And so I think that 200,000 number is fairly reasonable. There's a lot of things that need to happen and in order to support that number of investors. But I'll tell you what, it's actually not the supply of notes overall. There are more than enough assets that can be bought at the right prices, I believe, to support that. I think, the number one struggle people come to me with is like, where do I go to buy notes? And I think that's just not, I mean, it is if you don't know anything about where to look for them, but in general, like the size of the market compared to people, like there's plenty of stuff out there that you can find. That's actually one of the things that attracted me to the note business originally, is you don't have all of this crazy competition like you do in other forms of real estate investing, like markets and fix and flips and things like that. And I think there are a lot of things that are going to encourage people to go into notes. So like from my personal experience, I know a handful of folks who built really large rental portfolios over the decades. And now that they're getting, either they're kind of like retired or sort of like semi-retired, or they want to step back, they're selling off some of those properties, right? Because owning 60 rental properties, even if you have property managers, is a little bit of work to do, right? So I think there's a play to be had for people who have rental portfolios and they want to maintain that cash flow, but they don't necessarily want to do the work to convert those into performing notes that require a lot less handholding. So I think that will generate some new note investors. And if we just look at the size of the market, right? So Fred and Tracy said 89,000 seller finance loans generated last year. Well, your typical like active note investor, they don't need to buy 20 notes a year. I mean, if you're just buying a couple and you're buying the right ones and you're doing it over time, you're going to build a really large portfolio. So I think we're going to see that seller finance market of, 80, 90,000 grow quite a bit. Not to mention the other sources of loans that can get out there. So I think there's more than enough supply of loans to support those people. The other big thing I think that's going to push this is the need for seller finance, right? Like I was really kind of blown away when Fred and Tracy was saying that the average seller finance loan is like $247,000. I had always had it in my head that banks didn't loan about less than 100,000, but I didn't realize how much they've tightened up, where they're still not really making loans to self-employed folks, and their risk aversion is just through the roof. So I think we're going to see a lot more seller finance loans get generated versus bank loans. Like that percentage is going to shift more towards seller finance, and those seller finance loans are the ones that individuals, it's easier for them, right, to go and buy, because those are kind of one-offs right there. So I see it just a very sustainable market. I don't see banks wheeling around and just dramatically loosening up anytime soon, right? So I think that trend is probably here to stay for at least a good long while. So that's why I think we can get to 20x bigger than what we are now. But then the other question is, well, okay, if all those conditions exist, like why aren't we 20x bigger right now, right? Because we've got a supply of loans, and I believe there's a demand for loans. There are people with retirement account money. There are people looking to wanting to create side incomes, and you can get higher yields than you can in, say, the bond market, or even higher than the long-term stock market return. Why aren't people doing that now? And there's a bunch of reasons for that. And I think understanding these reasons, and as people address some of these issues, we'll see the market start to grow. So number one, for investors, it's kind of hard to source notes, right? So if you look at notes originated by banks, sometimes they float to like bigger hedge funds, or they might go to smaller funds. It's challenging to get a hold of those loans, right? They kind of need to filter down through the food chain to some smaller fund or individual that you're going to be able to buy from. But even then, once it goes through all of those transactions, it may be hard to get it at the price you need. It's possible, but the other problem with that model, where you're buying bank loans that are filtering down through the food chain, is the supply is going to be really lumpy and unpredictable, right? So post financial crisis, there was a lot more stuff available. You might have, it's kind of a one-off. Some large funds start selling and pushes a lot of assets down the food chain, but that's not really a predictable and ready supply, and it's kind of tough to get there. And then traditionally, buying these seller finance notes is not always straightforward either, right? So like a lot of people do a lot of homework to find the seller finance notes, and they'll do marketing and mailers, and they have to talk to the person who owns the note. And that kind of becomes a whole business in and of itself to get a one-off deal. And so that's part kind of challenging as well. I feel like PaperStack could jump in and help with this more. But that's kind of got a ways to go, right? Like I don't know what the mechanism is for like the mom and pop who sold their property on seller finance because that was their only way to get it sold, is like going to become aware of PaperStack and get it listed. So we need some mechanism to make that a lot easier. And then the other reason is knowledge of notes is just hard to get, right? So most people don't even know that it's a thing. There are some people who have heard of it, but don't know anything about it and find it kind of confusing. And then if you want to get knowledge in notes, it's historically been fairly challenging, right? Like there's some expensive training programs and mastermind programs that are typically 20,000 plus. I paid 15,000 initially for the one that I did. And this is the part that I've been attacking for the last few years with my online courses, trying to offer somebody all the information at a price point of less, $2,000 or less, where you could justify it if you just do one note deal. And now, obviously, like I mentioned earlier, I'm expanding that into more live training. So that's where I've personally been pushing on this, trying to make, and this part of what this podcast is too, is just making the information a lot more readily accessible and giving people the knowledge that they need. So the next reason that the note business isn't larger than what it is it's a very it can be challenging to complete a note transaction, and it's a very buyer beware world, right? So to buy a note, I can't just buy a note on my phone like I would buy a stock using Robinhood, or you could even buy like crypto using Coinbase, or other kinds of assets. It's kind of challenging, right? Like there's a lot of one-on-one talking to the seller, and then you got to go through this whole due diligence process. You got to pull title work. You got to get eyes on the property. You got to do all these things. You got to watch out for other liens that could be attached. And then and so that's a lot of work, and you got to know what you're doing. And then what can happen at the end of that, which happens to me all the time, is you find out, oh, there's a fatal title flaw, there's some issue with the note, and now I can't close on this, and now I just spent some money and blew off a lot of time on that as well, right? And then, of course, a lot of times the seller knew it was a bad asset. They were kind of hoping they would get it sold, and the buyer wouldn't notice, right? So that whole buying process, if you know what you're doing, it's not that challenging. But again, like it requires people to be very careful, and then it requires you to have all of that knowledge and implement it. So it makes it not easy to buy notes. So I think what we need to do is kind of find a way to where you can package loans in a way that the buyer can get all of that information without having to do it all themselves, almost like a Carfax for loans kind of thing, right? Like if you buy a car, you might get a Carfax, you might check certain things, but you're not like checking in with different government agencies to actually personally check whether there was an accident or whether it was a place that it was in a flood, right? Like you just get a report, and you can trust that and go through it. So I think we need to find our way to some kind of a model like that. I haven't seen that happen as of yet. Like really my ultimate goal for the note business would be to get it like those other industries where you could buy a note on your phone. And we're obviously very far away from that, but I think there's actually ways that that can ultimately be accomplished. It's not going to be tomorrow, but I think that can happen. You know, it's maybe more of a medium term thing. It's not a short term thing. I don't think it's a crazy long term thing though, either as well. Yeah, and so if you can find a way to pre-scrub assets before buyers go look at them, I think that would make it a lot easier. Like back in the day, I remember Chris 70 actually had his toxic asset list, because what was happening was so many, when Harbor and Window Rock were selling off their assets, a lot of them were bad. And there were so many people who would get an offer accepted, pull a BPO, pull a title report, find the same problem, not close, and then someone else would spend the money and do the same thing, right? Like it doesn't really make sense if there's a bad asset that you would end up where some of those cases, like 4 or 5 different borrowers spent money and time only to find the right problem or find the same problem, right? So I think if somebody like PaperStack did something where the seller basically paid for that pre-screen and then the buyers could just look at the pre-screen, they didn't have to do all of that legwork, then they could just close, and then maybe you bake in to the fees where the buyer ultimately pays the seller back for that. But then you would I think a lot of buyers would be more willing to put money into notes. And I think for the sellers, the ones who do have bad assets, they're just going to kind of figure something else out with them. But that's a down the road thing. Takes a lot of time to do all of this stuff. So I think fixing that buyer beware problem is going to be really key to being able to grow this whole market. But I think if we could get to that where you had like kind of a standard due diligence process, that Carfax type model, and you can almost have like ratings for notes. The other problem that's out there is when someone markets a note, they list it as 2 flavors, performing or non-performing. The reality is there's a bajillion shades of gray between that. The other bad behavior you see is sellers take a crazy loose interpretation of what performing is, right? I've seen ones where the borrower hadn't made a payment in 2 years. They reached some deal, the borrower made a good faith down payment, and they called it performing. That is not performing. So we need a grading system that more accurately tells the buyer what that note is all about, and not require the buyer to build their own system and figure all that stuff out on themselves. And then I think we also need easier access to the seller finance market. Like right now, if you have to do, there are brokers you can go to. Oops, let me back up. So, you can do all that marketing, you can do all that raking through the county records to find seller finance notes, and you can send them postcards and market to them and do that yourself. That's a whole business unto itself. Most people aren't going to do that. I've never done that. Now, there are people who do that as their business who will then broker the loans, and you can reach out to them. That gets a little challenging because their supply is not necessarily steady, right? They may not have something when you're ready to buy. And, they're going to want a broker commission. So now that adds cost to it. So I might be able to buy a seller finance note through a broker, but then I can't get it at the yield that I'm going to need for the deal to make sense. So we need some more ready way to tap into those seller finance notes. That's a heck of a lot easier And then the last thing is, I think the educational process for how to get up to speed on notes can be greatly simplified and streamlined. I feel like my Note Launchpad course was a big step towards that. There's still a lot of content to go through. But as we get into the Note Accelerator that I mentioned in some of the live group coaching, that's where I think we're going to be able to really start simplifying that for everyone. So that's kind of my vision of what the market should be. Notice, like, I'm defining like where it should ultimately go based on supply and demand and some of the problems that are keeping it from getting there. So hopefully you got a lot out of this. I don't know what all the solutions are to those problems, but if you're interested in investing in notes, or if you're just an entrepreneur, there are business opportunities galore in this space, right? And these are just some of the problems I mentioned. I'm sure like there are a lot of other things that could be done that I haven't even thought of, or that I didn't mention here. So I'm interested in hearing what solutions you have, or whatever problems need to be solved to grow the market. So please, like, either leave a comment or drop me an email, and tell me why maybe I'm wrong about some of these things, or some of the things that I forgot about, or other solutions that you have. So that's what I've got for you today. Next, we'll go back to interviews for a little while, but I'll continue to mix in these podcasts where I'm kind of giving you my most current thoughts as I'm neck deep into all that stuff. So I hope you guys have a good one, and I will see you next time.